All right. Good morning, traders. Happy Saturday morning. I hope you're doing well. You'll have to excuse the mess in the background. The little foot you see is one of my grandchildren sleeping peacefully for right now. If she wakes up, you'll get to see her pop into the camera. But I have family in town for this week, and 9 extra people in the house for a total of 12 right now. So we have them spread out everywhere, including little mattresses on the floor. So apologize in advance for that. But I, as always, like to spend Saturday mornings prepping for my potential swing trades into the upcoming week. And I like to start it off by knowing what economic data is planned and coming out next week. So let me share my screen with you real quick, and we will take a look at that economic data. Good morning, Bob. Good to see you. Thanks for joining us. All right. So for economic data, I like to use Forex Factory's calendar, and it gives me an idea of what planned economic data is for the upcoming week. Now, we can always get the surprise tweet or tariff news, something like that. And that's okay because I'm a technical trader, right? And I'm trading the levels on my chart. Only two things can happen in a trade. We either win or we lose. The important thing is that you stay disciplined to your trade plan and protect capital when you get the opportunity to trim some profits, as well as take your stop losses if they present themselves. That just means your plan didn't work for that trade. So, for planned economic data this coming week, I see nothing on Monday for the US markets. Coming in on Tuesday, we have core CPI numbers coming out, Empire State Manufacturing Index, some Fed head speakers on the mic for Tuesday. So we got a little bit of data that could cause some volatility in the markets there, mainly with those CPI numbers. Looking at Wednesday, that's when we will get our core PPI numbers, as well as some more Fed head speaking. Of course, crude oil inventories, which we get every week, then the beige book. Thursday, core retail sales month over month, and unemployment claims, as well as Philly Fed manufacturing index. Those are all things that could potentially move the market in one direction or the other. After that, of course, more Fed heads on the mic speaking. Nothing overly unusual about that. And then finally, on Friday, we have building permits, housing starts, consumer sentiment, and inflation expectations. So, really, except for Monday, we have some sort of economic data that has a red or orange folder. And on Forex Factory, that means that it could cause some volatility. It's higher impacting there. So, after looking at the economic data, the next thing I like to do is use COIFIN and just see, looking back over 3 months, a month, and a week. Uh, this helps me see if there's any sector rotation, if anything is changing week over week as far as money flowing into or out of. Now, I've already looked at this data yesterday, so I have a good idea that overall, looking back over 3 months, nothing has really changed as far as what is on the leaderboard. Semiconductors are leading the market looking back over the last 3 months, followed by metals and mining, then the JETS ETF, which is your airlines. Uh, Coming up next in fourth place is the tech sector, XLK, and then we have XOP, oil exploration. Looking back over the monthly, you can see the same names at the top, so that coincides with what we were looking at last week as well. Metals and mining, uh, semiconductors, regional banks here. KRE is regional banks. I like to use IWM to trade that. Then we have jets and tech and more oil and gas exploration. Looking back on a 5 day, that would be all of last week, you can see, or I see, that we do have some rotation, so to speak, in that the big names are down here towards the bottom, and your oil and gas related names have moved up, including XLE, which is the energy sector. So there was some rotation last week into the energy space, but not dramatic, so to speak. You still have SMH and metals and mining and jets still up towards the top. Um, Now, financials, big banks start reporting next week. So keep your eye on that. If you are in any financial names, just know that when big banks report, whether you're in a JPM position or not, they whatever name that you happen to be trading and have an open position in can be affected when JPM reports their earnings. All right. So, overall, my focus this week is going to be on the jets sector, semiconductors, followed by metals and mining, the tech sector, IWM, and then I want to look at IONQ, had a great, nice pullback this week. And so it is setting up for a potential swing trade into next week. Of course, IBIT, we had a great trade on IBIT. I missed the big explosive 4,000 plus points in Bitcoin as I had exited that position at target. But I want to keep an eye on it because the crypto space is very, very hot right now, meaning lots of talk about it, lots of news, lots of momentum there. So I'll be taking a look at IBIT along with Big Bear AI. We had a wonderful trade in the trendy room on BBAI. I went ahead and exited the runner that was completely free, just took the 200, 300 plus per contract off and told the room that I would be looking for a new longer term swing trade in BBAI because I like the name and I like where they are going with that company. So I want to take a look at that with you all today. Now, first, I like to start with the S&P 500 futures. I want to look at what happened last week on the weekly chart. Then I'm going to go down to a daily chart and a 4-hour chart just to get an idea of levels that I would be looking for buyers to show up as well as resistance levels where I would be looking for sellers to show up. So on the weekly chart on ES, you can see that last week we created an inside candle. If you've watched my video covering the candlestick pattern that I look at for well over 80% of all of my trades, whether it's intraday or swing trading, even long term investing. This inside candle is my go to candlestick pattern. So last week we created an inside candle here. That means coming into next week, I am very interested on if next week's candle closes below 62.23, then we've created the inside and down candlestick pattern, meaning this would be a sell zone for me up here. And if we close next week above basically, let's just say the all time high right now, we would have created an inside and up candlestick pattern, meaning that I would be looking at this as a buy zone to buy the dip. So next week is very important on the S&P 500 weekly chart to see if we get an inside and up or an inside and down candlestick pattern. Now, what else can happen? Well, next week's candle could close inside of this range of 62.23 and 63.35. If that happens, then we're just in a consolidating phase. I, I wouldn't be surprised, to be honest, because you can see here since we created these lows in April, we've had a very nice run up. And every few weeks, we create an inside candle. Now, the trend has been bullish. So, after creating an inside candle, we then create an up candle, creating a buy zone for me. You got an inside and up here, an inside and up here, a couple of weeks inside and then up here, again, inside and up there. So this is why this coming week's candle is important to me on the weekly chart. Do we create an inside and down, which we have not done on the weekly chart since this low in April? All right, now let's look at the daily chart and talk about it. You have the all-time high up here that was created last week, 63.35 and a half. Then you have an inside candlestick pattern, the lower weekly edge for next week, all inside of this buy zone. The daily EMA cloud here, this is a 9 EMA. It has been support. We haven't had a pullback to it in quite some time since the end of June. So it's healthy to see this consolidation here. It's healthy for the market and it will give us a more clear picture when we get an idea of where the weekly chart is going inside and up, inside and down, or just simply another consolidation candle inside the body of that initial candle. I would be looking for buyers to show up based on this daily chart next week if the S&Ps drop down to 62.72 by 62.46. That is my key zone to watch on the daily chart next week. Below 62.46, then I'm looking for support at 62.19, 51.90, 51.46 by 61.46 by 61.01 is the golden pocket of this move from the end of June. Remember when we had the 9 days up On ES, that is right here and now, basically all of last week, we just chopped in that range. So that's what I'm looking at on the daily chart. Now let's move down to the 4-hour chart and see what is going on here. We have been stair stepping up on this 4-hour chart, but since looks like Monday of last week, we created this swing low down here near 62.44. And since then, that we are getting higher lows as well as higher highs, but it's not any big explosive moves. It's just kind of a meandering trickle to the upside. Price is currently inside a 4-hour buy zone at 63.02 to 62.83. Now, if price drops below 62.83, I do have another buy zone right below there at 62.72 by 62.60. And you can see because we've been meandering to the upside, we have zones pretty close together all the way up. Now, a big, huge catalyst could push definitely through this zone because it has been tested multiple times, and the backside of the zone 6283 has been tested multiple times. So, really, on this 4-hour chart, I'm most interested in 6272, and I'm going to pull the bottom of this zone down because I have a trendy edge right below it, and I want to incorporate that edge. So on the 4-hour chart, the zone that is of most interest to me is 62.72 by 62.55 in this area. When I'm looking at a 4-hour chart and trading buy zones or sell zones off of a 4-hour chart, these are trades I'm looking to be in anywhere from 2 days to 5 days, sometimes longer, but definitely more of a shorter term type swing trade. Now let's take a look at NQ and see what it looks like. NQ also created an inside candle last week, so important levels for me to pay attention to in the upcoming week is a candle close on that weekly chart below 22,751 would be an inside and down candlestick pattern. And if we go up and make new all-time highs and close above basically 23,100, then it would be an inside and up candlestick pattern. You can see since we created these lows in April, we have been basically an inside candle every couple of weeks, just like with ES. So that you can see why this is an important week for me to see, do we create inside and up, or do we finally create a sell zone on the weekly chart via an inside and down candle? Up next is a daily chart on the NQ. I do not have this zone colored green, although technically how I chart it is a green zone. But because price has been so choppy here between 22,845 and the all-time high, I didn't put it as a green zone, but technically it is a buy zone on the daily chart 22,845 to 22,582 by the dip zone. Price came down to the EMA cloud just like on ES. Buyers did step in via this bottoming wick, but I have a yellow caution flag up here because of the trendy turn signal at that trendy level, which is or was last week's upper weekly edge. It doesn't mean that we're going to bottom out and come all the way back down here necessarily, but what it means is just to have caution in here, and you want or I want to be buying lower on this curve. So if we're chopping here, I want to start positions related to tech in the NQ when price is lower on the curve rather than up here at or near all-time highs. As far as the 4-hour chart goes on NQ, again, it looks very, very similar to ES. We have this zone, this 4-hour zone here that you can see has held as support. One, two, three, four, 5 candles tested this zone. We had no candle close below the zone, meaning this zone has acted as support. But the more times a zone is tested, the higher the probabilities are that it could break. So I need to be aware of that. I move the bottom line down here to this lower weekly edge for next week. And the key area that I'm watching now is 22,890 by 22,817 on NQ. If price breaks below that zone, my next area of support on the Qs would be 22,737. Then my next buy zone on the 4-hour chart here, 22,667 by 22,388. All right. As far as inside and down candles, we created an inside and down right here on the 4-hour chart, 23,01175. If you are bullish, you want to see the Qs get above this level and hold it as support, then I would be looking for potential new all time highs in the Qs. But the immediate resistance for bulls is 23,011. And the bears want to protect this level and keep pushing prices down from there. All right. So I told you that I'm going to focus on the sectors of the airlines, the semiconductors, metals and mining, tech. I want to look at IWM, IONQ, IBIT, of course. That's how I like to trade the Bitcoin futures. There's many ways you can trade it. You can trade it through MSTR, you can trade it through Coin, you can trade it through Mara, you can trade the Bitcoin futures, you can trade it through BITO. There's many, many ways. What I have found moves the most accurately to the Bitcoin futures is IBIT. And so that's what I like to use to trade Bitcoin. So I will be taking a look at that. And then lastly, the new potential trade set up on Big Bear AI. So let's get started in the airline sector. First up, that I want to look at is Delta Airlines. I'm going to start here on the weekly chart. Delta reported earnings. The market really liked it. They had a nice, big, powerful move to the upside. We created a weekly buy zone down here at 50.66 by 45.28. So that is where the buy zone is setting on this weekly chart. As far as the sell zone, or where I would be looking to take profits on a weekly chart, would be 60.11. Then I have an upper yearly trendy edge here at $64. And finally, the all time high right at $70. So there are some profit targets on the way up. For me, I do not like to be in swing trades that are counter trend, meaning Delta Airlines is in a bullish trend across all of the time frames that I watch. So I'm not looking for a swing trade to the downside. I could swing, or I could day trade this via puts to the downside. That would be fine if I'm using the PMZ and it sets up that way. And or if I am looking at a stock that is near the lower yearly edge, it's probably going to be in a bearish trend. You take, for instance, Delta here. when price pulled back at the end of March, beginning of April to our lower yearly edge. I promise you that these trend labels all said bearish. Well, overall, the market goes up. Okay. It just does on a vast majority of names. And Delta Airlines is probably going to be one of those because I don't believe they're going anywhere. So when it pulled back to this lower yearly edge, these trend labels would have been bearish. I am looking to buy the dip down here at lower yearly edges for longer term leap type trades or equity investment type trades. And so I will trade swing counter trend to the upside if we're at a buy zone and a lower yearly edge. That's the time that I will trade counter trend, but I give myself plenty of time to expiration if I'm trading options. And then for equity, I'm not loading up all at one price area. I like to scale in to those equity positions. All right. So that is the weekly chart on Delta. This would be a trade that I would be looking to be in if I was trading a weekly chart for a minimum of 2 months, all the way up to 6 months. So let's look at the daily chart, which is where I am more interested in trading. And I want to show you how I use Fibonacci to find a buy zone. So Delta reported earnings here on the 10th of July, where they closed the day prior to that report is where I ran my fibs, and we'll do that together. So the close of this candle, because it's a solid candle, means that it closed at the bottom of the body of the candle. I anchor my fibs from there and measure this nice big earnings gap up, and that gives me the golden pocket that I like to trade, which is the 50 to the 618 fib. I also have some confluence in here. These blue dots represent the 200 SMA, and the earnings report gapped price above there. And then on pullbacks, you can see that it acted as support and buyers showed up. What makes that obvious is these bottoming wicks down here. It closed on a very bullish candle, a nice hammer candle here after we pulled back. So this is a bullish setup for me, looking to buy the dip here at or near this golden pocket. You can see I have an alert in here at 54.80, and I have a good to cancel buy order in as well. So if I get a pullback to this area of 54.80, I'm looking to go long. That order I am buying the $55 calls for the August expiration on Delta right there. My first target, if I'm buying here, is going to be this upper weekly edge at or around 56.84. Then above there, I'm targeting 58.45. And finally, at my sell zone, 60.11, 63.83, and 66.82. So, as far as a risk to reward perspective, if I'm looking to get in at or around 54.80 and my stop would be here below 53.42, that's going to give me about $1.50 of risk. And my first target from entry is here at or around 57. So that is approximately $2.20 at the first trim target. Then, of course, that reward increases at each additional target to the upside. So that is my plan for Delta Airlines if I get that pullback. Now, no, if I never get the pullback, guess what? I'm not entering the trade. I am very patient. I do not chase. I don't have a fear of missing out. If I don't get the pullback, so be it. It wasn't meant to be. For me, discipline is the number one thing in my trading. If I were to FOMO this trade, and even if it's a winner, I still don't feel like I won, so to speak, if I didn't follow my plan. Because what that does is create dopamine in your brain that you think each and every time you can FOMO and buy early, right? Not wait for price to pull back where you have planned. It creates this dopamine and this euphoria. And then trade after trade, you try to do the same thing. And I don't know what it is, but for some reason, it doesn't work over and over again. And you have given up so much of your capital by that time. And not only that, but you have not traded with good discipline, which then creates a whole trading mindset mental block. So I will stay disciplined, waiting for my levels. Give me 1 second. All right. Sorry about that, guys. So, up next, I want to take a look at a couple of semiconductor names that I would be interested in buying the dip on. First off is Broadcom. Let's look at it from a weekly time frame perspective. New all-time highs last week. Nothing bearish about making all-time highs. One of my favorite traders at Simpler, Henry Gamble, says that there's nothing bearish about all time highs. I couldn't agree more with Henry. And so, what I am looking for is a buy the dip opportunity. The weekly cloud is down here all the way at 252. That's an important level for me to pay attention to, as well as right here, this nice large candle that was not technically an inside candle before it, so I don't have it marked as a buy zone, but it was very, very close. So somewhere right around 250 would be a good pullback buy here on AVGO off the weekly chart. So let's look at the daily chart and see where the buy zone is on the daily. First, I want to point out where this week's lower weekly edge is at, which is 272.36. Then my buy zone here, the inside and up candle formation, 270.73 by 262.66. Why do I like this zone? I've got the EMA support, the 9 EMA up here on my trendy cloud, as well as the 21 EMA, which a lot of traders trade based off of. So a buy the dip opportunity in this zone is here for me to take advantage of on AVGO. But when I look at the different levels on the chart inside of this zone, I can see that the zone has been tested, so I would be looking to scale in. So towards the top of the zone would be where I would use half of my allocation. And then down here towards the bottom of the zone is where I would fully allocate to a swing trade. Now let's look at the 4-hour chart. This is a trade if I was just wanting to be in Broadcom for next week. Okay, this is what the trade setup would look like right here around 272 would be the buy the dip. My stop would be below 269.09, which would give me a risk of approximately $3. As far as reward goes, I would use the upper trendy edge and the all time high. So that reward zone would be 7 to $10. and the risk zone would be about $3. So good risk to reward here just for a trade out to one for 1 week. Now you can choose the July 18th expiration or you can choose the July 25th. I like to err on the side of a little more time than a little less time. Now, if the options are just too expensive for my allocation amount, I can go slightly out of the money looking at an area that I would trim at. For me, that would be right here at about 276. So that means I could look at buying the 275 calls, and obviously, I would be waiting for a pullback. So on these July 25th, where I would get in here at about 272, I can look and see approximately what they would be trading for by adjusting this option price until I see 272 here. They would be trading for about 630 a contract. So I like to at least be able to buy two contracts. That way I can scale out on the way to target and protect my capital via a break even stop on the remainder of the position. And I wouldn't be able to afford, with my $1,000 allocation per trade, I wouldn't be able to afford two contracts. So I can either go further out of the money, which is not necessarily something I like to do, but I know my target is 280. The 280 calls here have the liquidity that I would be looking for. And I know that I could get at least two of those contracts down near 272 because those would cost me about $4.35. So this option would be playing to have more time, but buying further out of the money. So if I'm looking at the delta here, it's a delta 40. My pretty much cutoff is I'm not going to buy so far out of the money that it is less than a delta 30. I like to stay somewhere between a delta 40 and a delta 50. All right. The other option, though, is you buy less time and trade it as a very much just a short term swing trade, meaning a few days. You buy less time, you buy at the money, those, for instance, 275s. That would give me plenty of room to buy two contracts if I'm buying near 272. You can see those would be about $3.85 a piece, but I have less time to expiration, which means if the trade just chops around, I'm going to lose theta decay faster than if I had more time to expiration. So that's a couple of things, and you need to figure out which one you like better. I would encourage you to journal this kind of stuff and review your journal, seeing, okay, is it better for me to buy more time and a little further out of the money options, or is it better for me to buy less time and more at the money or in the money options? All right. So that is a trade setup for AVGO. My preferred way to trade this name, it would be off of that 4-hour chart using the trendy edges, the lower weekly edge buying the dip here at about 272 with my stop below 269, and I'm targeting basically 280 to the all-time high with a trim at or around 276. All right. So that is my plan for AVGO. The other semiconductor name that I like is Taiwan Semis, and I will look at the 4-hour chart here. Well, no, let's start from the top down. let's look at the weekly chart. Here is my favorite candlestick pattern, right? The inside candle, and boy, it closed right in the middle of the previous candle. It's a nice looking chart, but we are extended from the trendy cloud here on the weekly. A pullback to this cloud would bring us to this inside and up candle formation, making this a buy zone from 206.63. But the cloud is sitting at about 213. So when I look at the daily chart and I consider what if price moves all the way back down to the weekly EMA cloud, that would put me in this buy zone here. But notice I have the inside and up candlestick formation right here at 224.48 by 221.18, and it has not been tested. You could be forming a rounding bottom right here on TSM. You see how we started making higher lows here, and it gives you this rounding look. Well, right here at the bottom of where this thing has rounded out so far, meaning all of last week, I have a lower trendy edge. This yellow edges are weekly edges. That means I want to look at that 4-hour chart for a trade again that I would look to be in for 2 to 5 days, trading the weekly or yes, the weekly edges. I would be looking to go long on a pullback on TSM at or around 228.17. Notice the bottom of this zone is very, very narrow, very, very narrow zone here. The inside and up did not give me much trading range. What I can do is I can take this big imbalance candle here that we pushed up and made new all-time highs off of, run some fibs here to the all-time high, and then look at this in the perspective of using one of these Fibonacci levels as my stop to give me at least a dollar risk down here. Notice the golden pocket of this move though is where price is at right now. I will still stay disciplined to wait for my trigger where I have an alert set right now, but I would increase my risk here and use this 764 or the 887, which lines up with a bull channel. So either risking $1 or $2.50. Which one would I do? Well, this name has a daily ATR of $5. That means risking $1 is kind of an intraday type of trade. So if I want to trade a swing trade, I need to give it a little more room for a pullback. All right. So that if I was using the 887 down here, I would buy half allocation here towards the top, add half allocation here. But looking at the next buy zone is just below where I would stop out on a trade from here. So that tells me TSM might be better as a day trade next week rather than a swing trade. Y'all understand why and how I am saying that? Or why I'm looking at this and going, yeah, I don't really want to place a swing trade with just a dollar risk because this thing moves way more than that, even in a day. But I also don't want to place a swing trade with a risk of $2.50 because my stop is right before a trendy buy zone. And so maybe it's better just to day trade this. All right. So that means that AVGO is my preferred method. Now let's look at Nvidia. Um, Disclaimer, I am a shareholder. I have Nvidia equity for sure and have had it for a long time. So just that disclaimer. You can see Nvidia made new all-time highs this week. It actually became the very first $4 trillion company closing above 164. Lots of excitement around NVIDIA and all that they are doing in the AI and semiconductor space. So, look, this thing, any dip buy opportunity that presents itself, I would be interested in, and I have alerts set here. I have targets to the upside. These are Fibonacci extension targets because guess what? I have no candlestick structure below where or to the left of where price is at right now because we're at all time highs. So I simply use Fibonacci extension to find targets to the upside. I love this zone, the golden pocket for me to buy the dip. So if price continues making new all-time highs, that means my 50 and 618 uh, Fibonacci levels are going to go up with it. So now the new golden pocket area to buy would be 155. Let's just round that up. 155 to 151.91, and the 21 EMA is lining up in there. I like this move that started the new all-time high rally, this candle that's larger than these little tiny candles here. I like that this is all lining up right here, as well as last week's lower weekly edge. Now, I have an alert also set at this week's lower weekly edge because weekly edges, the lower edges where I'm expecting buyers to show up. I need to know that that is there and look at a 4-hour chart for where that buy zone would be in relationship to this lower weekly edge. That would give me a buy zone with a risk of about $3. Then my first profit target or my target would be obviously all time high, but also this upper weekly edge right here. So you got about $3 of risk off of this 4-hour zone, and your reward is approximately $7. So nice risk to reward here. I got my alerts set. If we get a pullback to the lower weekly edge on NVIDIA, this 4-hour chart I love. So I will mostly be concentrating for a swing trade on AVGO and NVIDIA. But TSM, Taiwan Semis, AMD, those names, I'm also interested in trading, but will more than likely focus on those for day trades just because of where they're at. For instance, AMD, look, it didn't do as well as the other semiconductor stocks last year or really this year. Nvidia is making new all-time highs, and AMD has some room to go before all-time high, as in about $80. All right. Why would I not be interested in a focus on AMD for a swing trade this week? Simply because of where it is in relationship to my buy and sell zones. AMD is right at a sell zone for me on the weekly, on the daily, on the 4-hour. It's just not my preferred place to go long in a sell zone. So that's why I don't have a focus on it, but I do have an alert for a lower weekly edge pullback next week. All right, let's move on to metals and mining and the two names that I'm going to focus on this week for a potential trade. First up is Freeport. You can see that last week it popped up into this sell zone on the weekly chart, and there were definitely selling pressure in there. See the big topping wick. That is obvious on the weekly chart. As far as buy zones go for Freeport, I'm looking at 40.09 by 36.99. Hold on one second. My grandson just woke up. Come here, buddy. Okay, well, you can go potty, okay? I love you. Go potty. Sorry, guys. I told you I got a house full. That's Liam. He's 3 and he is a sweet, sweet boy. All right. So my buy zone here on Freeport is 40.09 by 36.99. And you can see my target zone would be 48.18 to 52.61. Price did pull back from there. It is not the first time price has been at this zone since we created it, and I would be looking for a trim at the bottom of the zone and then a trim midway up at about that psychological $50 level, but I would be targeting 53 on this weekly chart. Now let's look at the daily chart here. We created some inside and up candlesticks. We have a trendy edge down here at about $45, as well as a trendy edge here at about 44.29. My buy the dip area on Freeport is 45.53, and I'm trading this zone. Now, I would scale into the position, starting it here at the top and then adding to it here towards the bottom, and set my stop here with a daily candle close below. This is a more aggressive entry on Freeport. The more conservative entry, it would be to wait for a pullback to this trendy buy zone, as well as the daily 21 down here at 43.38 by 39.85. So if I'm going to trade this zone first, I'm going to trade it on a 4-hour chart. Okay. And we will map that out together. If you trade this squeeze, Freeport has been in a 4-hour squeeze for just over a week or right at a week now. And the momentum is starting to move to the right direction. You're also getting a trendy turn signal here. So I like this zone. It has a risk of about $1, 45.67 to, and I would use this monthly edge down here, $1.40 of risk. And then my reward, right? The upper weekly edge, which would be about $3 reward. So $1.50 risk, $3 reward. That is a 2-for-1, and I like that. Now, as far as a target above the upper weekly edge on Freeport, I would need to go over to the left. So if I run this first target, turn on the left extension, and then just scroll back to where we created an inside candle followed by a down candle on Freeport, I would come to this area right here. So that means that my targets are 48.59 and 50.12 for this trade. So here's my buy zone. Here's my target zone. As far as choosing expiration, right? We're just talking about a 4-hour trade. My longer term trade would come down in this zone. This is a separate trade just for a week or two. So I would look at the monthly expirations. On these names that trade smaller price, right? It's only a $46 stock. I tend to like to go with monthly expirations rather than weekly expirations. So looking at the August 15th expirations, I can see I have plenty of liquidity, plenty of volume. Everything looks good. So I would be buying the $45 calls here out to the August 15th. And then this is my target, 48, 59, 50, 12. Okay. That's the trade I would like on Freeport. Next up is Hecla Mining Company. And Hecla is right at a sell zone on the daily. This zone was created way back in November and it's been tested. We got a topping wick above the zone and now it's being tested again. So this zone has actually been tested 1, 2, 3, 4, 5, 6, and now, hold on one second. Sorry. And now we are on the seventh test. So my new target above the zone, what I would do is use the top of the zone as my first target on Hecla. All right. And my next target is this upper yearly edge and then $7.68. Now, as far as a buy the dip, I want to look at this candle structure right in here. This would be my zone to buy the dip. I will color that green. All right. And it would give me a risk of approximately 50 cents. Now, this thing is a small stock, okay, trading at $6, six and a half. Um, so a 50-cent move is actually a couple of day ATR. That's reasonable for me. If it's a stock that moves $5, then this zone would not be reasonable. But this thing doesn't move a lot. So I need to determine my expiration for my uppermost target. And if I'm buying at 589 and my uppermost target is 768, that means I need to plan for at least a $2 move. And looking at the monthly ATR, that tells me I need to buy out 2 months minimum. Okay. So I would look at the September, right? The September monthlies. And very affordable, obviously, very affordable. I would go with the $5 calls, and the reason why is the $6 would be out of the money. The $5, if price pulls back to my zone, would be in the money. So looking at those $5 calls right now, where price is at, they're only $1.50. And if on a pullback, they're going to go down even further. That tells me they're very affordable. And potentially, I need to look at buying more time. Do I have liquidity out to the Decembers? So I told you that when I'm trading a stock that has a smaller value like BBAI or Hecla, I will buy extra time just because you never know. You could get into a situation like I was with BBAI where I bought that extra time and price just kept moving to the upside where we were really able to utilize the extra time to expiration to get really nice profits on the continued momentum. And metals and mining, that sector is on all time frame look backs as far as strength and leader. So I would choose on this trade the $5 calls, right? It has enough. I mean, obviously, people are going a little right at the money or out of the money here. But on a pullback, the $5 calls are going to be at the money for me. So I would be looking at the December $5 calls, or even going to the January January $5 calls, where I have even more liquidity and I'm not paying that much more per option contract. So HL Freeport is a shorter term swing trade, but Hecla would be a longer term swing trade for me. And it's buying this zone, and these are my targets. All right. All right. Up next, let's look at Apple. I wanted to take a look at Apple. Poor Apple had been lagging behind the rest of the Mag 7, but really overall, it has turned itself around from a monthly time frame perspective. It's now bullish from a weekly time frame perspective. It's bullish as well, but the yearly is neutral, and we're sitting right here at the yearly edge mid. So a this is resistance until price can push above it and establish it as support. What happened this week in Apple, and why did it feel like it was just going to keep going and going all the way up to 20, 230, 235, right? Well, this happened. You see the inside and down candlestick structure right there at 217. That's what happened. This is where sellers were waiting. Okay. And price did pull back, but it pulled back and created an inside candle here. Just like ES and NQ, it is either going to create an inside and up, an inside and down. If it does that, it's pulling back to my weekly buy zone, or it's going to just consolidate here, waiting for earnings, which are at the end of July. Now, in my experience with playing Apple, you can get a move up in ahead of earnings, and then I it could just be me, but a lot of times I Apple's price falls after earnings. So, I'm not saying that's what's going to happen this year, but I need to be aware that earnings are the end of July, meaning I could buy to potentially play a continuation move up ahead of earnings by the July 25th, or choose the August 1st, knowing that I would be out before earnings. I am erring on the side of choosing the July 25th at the money calls at this zone of 209, basically 209, and then the bottom of the zone is 206. That is a $3 risk inside of this zone, and my first target is going to be 215, which would be about a $6 reward. So again, a nice risk to reward. Above 215, I'm looking at 221 and 225. All right. So that is a trade idea. I have an alert set for Apple. You can see my lower weekly edge is inside of here. Uh, for if you want to be conservative with your profits, you can trim them at this yearly edge mid. I'm not putting a trim there just because we have hit it so many times that on a pullback, I'd like to see some momentum all the way back up to 215. So that would be my plan for Apple. All right. Up next, I wanted to take a look at IWM. IWM, or the Russell, has been lagging behind the Nasdaq and the ES, but it did have a good move this week and it created an inside candle. It is the second week that we've been inside of this monthly supply zone or sell zone. We have hit what we call in the trendy room the imposter level. And now I want to see if this 618 and the yearly edge mid can hold as support. We have about an 85% probability of price going up to the 887. So that's what this trade is based on. So keep in mind that yearly edge mid and the 215 level is where I'm expecting buyers to step in and that hold as support. So let's go down to a smaller time frame and look at where price is at. If I'm looking for a trade just for this week, this coming week, then I'm trading this zone up to the upper weekly edge at 225. I'm trading from this lower trendy edge to this upper trendy edge, about $6 move there. If I want to trade off of a daily chart and not just be in the trade for a week, but go out to the August monthlies, then I would be trading this entire zone, which is a little less than $3 wide here, and my target is going to be 226 and 230, 231. So $3 risk and about $5 to $10 reward. So that's what a trade using the August monthlies would look like for me. Looking at the 4-hour chart and just trading this weekly edge to weekly edge, this trade would be 221 to 219. It's a $2.20 risk here, and the reward is 3.5 to $5 reward. So a couple of different options there. I personally would choose either the if you're trade just wanting to be in the trade for like a week, you can go with the July 18th expiration, but I like to give myself just a little more time and I would go with the July 25th. So not the monthly expiration, but the week after. And remember, I would be buying a dip down here near 220. So I would go with the 220 calls and you can see there's plenty of liquidity for me and what I'm looking for at that strike, and it would be affordable for me to buy at least two. But if you're wanting to do a longer term and trade you would be in for 2 to 4 weeks, then you look at the August monthlies here. And on a pullback to, let's say, here it is, 215.56. All right. And I'm ultimately targeting 234. That is about $19. And you can see the monthly ATR is about $19. So this trade going using the August monthlies would be to buy the dip back here towards 217 ish, and you want the weekly candle to close above 215.56. If you get that, right? If I get that, if I get a pullback to basically 217, I'm going to buy the dip here on IWM. Then my first target is 225.92 and then 234.64 by 238 would be my ultimate target. And hey, I'm not going to complain if we come up here to all-time highs, but I'm not expecting that with an August monthly expiration. This is my ATR for the monthlies. So this is my buy the dip zone on IWM using the August monthlies and ultimately targeting that 887 up there at 234.64. All right. All right. Let's look at IONQ and I'll speed this one up since I have been talking for an hour. IONQ is right at a weekly buy zone here. I like this play. Buying at 41.21, scaling into this trade, adding at 38.87 by 37, and my stop would be at $36. I've got about a $5 risk on this. As far as reward, that first reward is going to be about a 1 for 1. Then above there, I'm looking for 50.57 and finally 54.74. Let's just call this first target 47, second target 50, and third target 55. This is my buy the dip zone and I'm scaling into the trade. So my ultimate target would be $13 above. You can see the monthly ATR is 10. That means for IONQ, I would need to go out minimum to the August monthlies, but all the way out even to the September. All right, you can be the judge of that. I personally was thinking I would go with August monthlies just because the momentum in the name. But I might change my mind and go with September. Either way, here is my buy zone. Here are my trim levels. And yeah, that's my trade idea for IONQ. And then let's look at IBIT. And I don't know why it's not still on my watch list, but I will add it back. Buy the dip on this momentum going on here. All-time highs, nothing up and to the left, no structure to target. Simply beautiful, beautiful breakout here. This was the zone that we bought, but I took profits and I missed this move. All right, but that's okay. I traded my plan. Now I'm looking for a pullback buy on IBIT. And I'm just going to go from where price finally got moving up to the high. And you got a couple of zones depending on how aggressive you are with where you want to buy the dip. The first would be for me here at 236 to the 38.2, which would be 65.91 to 65.09. That would be buying the bull channel. First target would be that all-time high. And then the next target, I would just use the same range to draw some Fibonacci extensions to get some higher targets. I like to use the 38.2, the 618, and the 100 here. So I would be targeting above this all-time high. I'd be targeting 69, then 71, and 73 on IBIT. This is a more aggressive buy the dip pullback. The more moderate aggressive would be the bull channel here at the 5618. And then, of course, the most conservative entry would be waiting for this buy zone here at 62.29 by 61.01. So, three different entries depending on how aggressive you are, right there. By this is aggressive there moderately aggressive, and then here would be more conservative. Okay. So that is my plan for IBIT. And if I'm targeting, say, $73 and I want a move up to $73, those August monthly expirations would give me plenty of time to make that move. So those are my buy the dip zones on IBIT, as well as watching it for day trades all next week using the PMC. Now, finally, I'll wrap it up with BBAI and the next area that I'm looking to buy the dip on. Again, I am out of my previous trade up in here. I'm out of that trade now, and so I'm looking for a buy the dip play at 625 by 567 and targeting 846, 998, and 1293. As far as expiration, if I want it all the way up here at 13 and I'm buying at 6, that's $7. Look at the ATR. I need to buy 3 to 4 months, which would be the January calls. All right. I like to buy at the money. I'm buying somewhere around $6.25. That would be these calls right here. You can see there's plenty of liquidity. Look at these higher strike prices, and the liquidity on them is crazy. But I like to buy at the money, so I'm going to stick with at the money. If you like to buy slightly in the money, then you could go with the $5 calls. Either way, you don't have to pay much more for the $5 calls as what you do the $6 calls. That would be completely up to you. But this is my plan for BBAI's new longer term swing trade here. All right. All right, guys, let me just check. Let me just check if I have any questions in the chat that I need to answer. First off, good morning, Daniel, Gary. I told y'all in the chat, Deepak, Bob, Anna Marie, good morning. Black Beauty, good morning. Sheba, my sister, good morning. Govinda, good morning. Govinda says, I've been looking at IONQ for a few days as it had a big 3A plus on the daily. Yeah, that's Taylor's system, right? Yeah, I like the name. I love this pullback to this weekly buy zone. I really love it to scale into if we have further weakness, right? But once price got above that 618, I like it up to this target here of 50.57. I just really like that trade. So yeah, I'm hoping I get a buy the dip opportunity in IonQ, to be honest. And if I do, I'm going to take advantage of it. Bob asks, for a 4-hour chart, if a candle closes below your stop outside of trading hours, but the next day price is back above, do you consider it stopped out and close the position? I do not, Bob. No, if it closes below and the market is closed, then I'm watching that 9 a.m. Eastern to 1 p.m. Eastern candle to see if it closes above or below my stop. And then I will get out on that midday candle there. And after that, I'm obviously watching the close. But no, I don't take the aftermarket price action if it is down below my stop. I'm not going to take that price action into consideration for my stop. I will stop on the candle that I can control. All right. Thanks, Cece. Appreciate your support, guys. If you haven't already, can you do me a favor? Hit the like button. I just started this YouTube channel, and it's not easy to get momentum on YouTube, but I am doing my very best to put out good quality content that I believe helps all traders, whether new to trading or been trading for a while. If you're struggling with consistency or you're struggling with that trading mindset, I believe that this channel is a great home for you. And there's nothing I like to do more than to help people and to teach. So if you could give me a like, comment on some videos, and be sure you're subscribed to the channel. I look forward to seeing you next week. I have to mention, if you're not a part of the Trendy Trading Room at Simpler Trading, come and join us. There is a link in the description below where you can join us. Believe it or not, for only $7, you get a 30-day monthly trial. I believe, and there's many people here in the chat that are part of the Trendy family, that they can speak for themselves. But I believe that once you come in and you try the Trendy Room, you will fall in love with the community of traders that John and I trade with live every single day. And you'll want to be a part and subscribe to our room. So, come and join us. Come check us out. We have a great time. It's not just John and I, but we have a great community of traders that are very supportive and, yeah, just a great group of people. So come join us on that trial. If you're not a part of the Trendy Room, check out simplertrading.com. You can or use the link in the description. Until next time, guys, much love as always. Thank you for your support, and I will talk to you soon.